Before you hold your newborn for the first time, there's one thought almost every parent secretly has. What happens to my family if something happens to me? And here's the truth most new parents don't hear. The moment you become a parent, life insurance is no longer optional, it becomes a financial seatbelt. Just like you'd never drive without one, you shouldn't raise a child without at least understanding the basics. Today, I'm breaking down a simple, beginner-friendly checklist, no jargon. No scare tactics, no sales pitch, just the essentials every US parent should know. But before we start, here's the part most people don't know. Even if you're healthy today, your ability to get affordable life insurance could change tomorrow. One diagnosis, one medication, one unexpected health event. That's why new parents shouldn't wait. Let's get into the checklist. When you become a parent in the US, your financial life suddenly shifts. You go from thinking about weekend plans to thinking about daycare, healthcare premiums, out-of-pocket costs, saving for college, and what would happen if your income disappeared. And life insurance is one of the few tools that can replace income instantly if tragedy strikes. But most new parents feel overwhelmed. They hear terms like term, whole, underwriting, riders, and beneficiaries. They hear stories from coworkers. They see ads everywhere, and they don't know where to start. So here's the first point in our checklist, the one that shapes everything else. How much life insurance do you actually need? Imagine a couple. We'll call them Mark and Elena. They just had their first child. Mark makes $75,000 a year. Elena stays home for now. If Mark passed away tomorrow, Elena wouldn't just lose him. She'd lose $75,000 a year of income that pays for food, rent, childcare, healthcare, and everything else that keeps the family going. A simple rule of thumb many US parents use is 10 to 15 times your annual income. But here's where most people make a mistake. They only think about replacing income. Not the new expenses that come with raising a child in America. Childcare alone can cost $10,000 to $15,000 a year. Healthcare premiums for a family plan under the ACA marketplace can easily jump by hundreds of dollars a month if you are suddenly a single parent. College tuition, well, that needs no explanation. So when calculating the amount, think about income, replacement, childcare, mortgage or rent, existing debts, future education costs, emergency buffer. Most parents land somewhere between $500,000 and $1.5 million in coverage. And remember, this isn't legal or tax advice. It's general education to help you think through your own needs. Next on the checklist, term vs whole life, which makes sense for new parents. Let's keep this brutally simple. Term life is like renting insurance. It covers you for 10, 20, or 30 years. It's extremely affordable and designed for temporary needs like raising kids. Whole life is permanent and builds cash value, but costs significantly more. For most new parents, term life fits the situation. Because kids grow up, mortgages get paid, and the need for a huge payout decreases over time. But here's where people get confused. Most American families don't need lifelong coverage. They need coverage during the years their kids rely on them financially. If your baby is newborn and you buy a 20-year term policy, you're covered until they're a college student or young adult. Here's a quick example. A healthy 30-year-old parent might pay around $25 to $40 a month for a $500,000 term policy, but the same coverage with whole life could cost $300 to $500 a month. Most financial educators recommend, get affordable term now. Then reassess later once your kids grow up and your financial picture changes. But again, no product is perfect for everyone. Just know the difference and choose based on your current needs, not marketing promises. Next checklist item, naming the right beneficiaries. Most parents quickly name their spouse. That's easy, but here's the part almost every new parent gets wrong. Never list your minor children as beneficiaries. In most states, minors can't legally receive a life insurance payout. That means the court may have to appoint a guardian to manage the money, which creates delays, drama, and legal fees. Instead, parents often choose their spouse, a trusted adult, or a trust, if they want funds managed until the child reaches a certain age. Most people don't know this part, but life insurance companies pay out quickly, sometimes within weeks, as long as the beneficiaries are named correctly. Next on the checklist is something parents almost always forget. What factors affect your life insurance? Price? Life insurance underwriting in the US is based on risk. The healthier you are, the cheaper your policy. Your rate is shaped by your age, whether you smoke, your height and weight, your family medical history, blood pressure, cholesterol, A1C, past medical events, driving record, even hobbies like skydiving. But here's the good news. Many companies now offer no medical exam policies, especially for younger parents with clean health histories. These can be approved in minutes literally, but wait. Here's where most people make a big mistake. They wait until after they have their baby to apply. Why is that a problem? Because pregnancy and the months after can bring temporary health issues like high blood pressure, gestational diabetes, postpartum complications. All of these can affect your rate. So if you're watching this and planning a family, applying before pregnancy can lock in a better premium. If you're already a parent, no worries, you can still get coverage. Just understand why prices sometimes differ. Next item, do both parents need life insurance? Many families assume only the primary earner needs coverage. But here's the truth most people don't think about. If a stay-at-home parent passed away, the surviving parent now needs full-time childcare, possibly reduced work hours, help with household responsibilities, additional support systems. Replacing the work of a stay-at-home parent can cost tens of thousands of dollars a year. So yes, both parents often need coverage, even if only one brings in income. Next checklist point. Check your employer life insurance. But don't rely on it. Many Americans get group life insurance through work. It usually equals 1 or 2 years of salary, and it's great to have, but here's the part that surprises people. If you leave your job, get laid off, or switch employers, your coverage usually disappears. Most families need more coverage than a job can provide. So think of employer insurance as a bonus, not your main protection. Plus, group policies don't always let you choose your coverage amount, and they may not be enough to protect a growing family. Next checklist item, understand the difference between monthly payment and long-term value. A lot of people shop for life insurance the same way they shop for car insurance. They pick the lowest monthly payment. But here's where that goes wrong. If you pick a 10-year term because it's cheaper, your kids might still be young when the policy expires. Then you're forced to buy a new policy at age 40 or 50, when rates are much higher. Sometimes choosing a 20 or 30-year term saves money in the long run. Think big. Picture. Think about the years your kids will depend on you. Think about college. Think about your spouse managing life alone. Now let's talk about something that doesn't get enough attention. Life insurance and debt. In the US, your debts don't automatically die with you. Mortgage? Still there. Private student loans? Often still there. Credit cards? Possibly. Car loans? Same story. And while federal student loans are typically forgiven upon death, private loans are not. Life insurance can help pay these off so your spouse and kids aren't left juggling bills during the hardest time of their lives. Most people don't realize how quickly debt becomes a burden when a household goes from 2 incomes to 1. Next checklist item. Review and update your policy every few years. Life changes fast, especially with kids. You move, your income changes. You buy a home. You have another baby. You switch insurance companies. You pay off debts. Every 2 to 3 years, take a few minutes to confirm your coverage still fits your life. Most people don't know this part, but you can own more than one life insurance policy. So if you already have a $250,000 policy but now need more due to a new baby or mortgage, you can simply add another term policy instead of replacing your first one. Let's bring this all together with a quick final scenario. Imagine a family, Sarah and Daniel, 2 kids, mortgage, car payments, childcare costs. Daniel makes $85,000 a year. Sarah works part-time. They live in a typical suburban town. If Daniel passed away unexpectedly, Sarah would face the mortgage, $1,200 mo childcare, healthcare premiums jumping without employer coverage, household bills, car payments, college savings, everyday expenses. Without life insurance, Sarah could lose the home, rely on family for childcare, or struggle financially for years. But with a simple 20-year term policy, something that may cost Daniel less than $1.5 a day, the kids stay in their home, Sarah stays financially stable, and life continues without added hardship. Life insurance isn't about dying. It's about allowing your family to keep living. Before we close, here's the last checklist item. Take action, even if you start small. Your first policy doesn't need to be perfect. It doesn't need to be the biggest. It doesn't need to be forever. But doing nothing is the only wrong choice. Apply for quotes, compare terms, pick the coverage that matches your current budget and family situation, and upgrade later if needed. Most parents say the same thing once they buy their first policy. I feel like I can breathe again, because life insurance isn't about paperwork, it's peace of mind. It is knowing your child's future won't collapse because of something out of your control. If you want a deeper breakdown or a part 2 including how to choose the best policy, how underwriting really works, and how to avoid common mistakes, comment more and I'll make it.